Hey, welcome back. This is another installment of the Toronto Real Estate Market Report. This month, we're talking about the October Market Report. I am your host, Stephen Young. If you want to get a hold of me, just subscribe to this channel or reach out to me at all the links below. So, in September of this year, this is what happened. We looked at the home sales. There was 5,592 sales of homes and condominiums across the GTA, which was an 8.5% year over year increase. That is the slightly good news that I had to report for you this month. Now, is it all good news? No. Is it better than it was that I've been reporting all year? Yes. So we are slightly starting to see potentially the bottom of the market where we're seeing a slow uptick of production on the buying side. If you look at the inventory on the supply side, it was 19,260 new listings in the month of September, which is another increase of 4%. We do not like to see that number continue going up because it adds for days on market, adds supply chain issues, it adds a lot of issues. We can't absorb that much inventory. We just don't have the purchasers buying right now. Could we sell another 19,000 homes this month? Absolutely. The problem is, one, there's a lot of unaffordable inventory in the marketplace, but we're going to get into that later in this presentation. Inventory is actually helping with the interest rate reductions. But as you see, we are still in a buyer's marketplace. 5,592 home sales in 1 month sounds amazing, and it is for basically 99% of the jurisdictions in North America. However, for the Toronto market, we typically, in a normalized market, we generate between 9 to 10,000 sales per month on average. So we're still around half of what we generally do. The good news is we are most likely getting out of this bottom and turning the corner. So the new listings and market conditions. So the year over year inventory growth, yes, it's up, but it is slowing. So last month, if you recall from that video, we had 8% year over year growth. Now we're at 4%. So the inventory is slowing, which is a good sign. Now, this is, keep in mind, a snapshot of the marketplace. These numbers make no sense to you if you have nothing to compare it to, which is why we compare it to year over year in the past month. So are we trending upwards, downwards? Are we balanced? That's what we're talking about. So, but the buyers are still enjoying a considerable choice. You have so much inventory to choose from. You have the negotiating power. You have pretty much whatever you want at your disposal. And sellers are really anxious to sell their properties because, look, we know we're coming into the winter months, the slowdown months, typically the seasonal slowdown months. And we're coming off of the summer slowdown months, and nothing really happened in between in the fall session so far. Now, we are still early in it. October, November still are technically the fall markets, but the numbers are not as great as we'd like to see them in the fall markets, but they are slightly improving from where they were in the summertime. Current inventory levels. So inventory status elevated but stable is what we're telling people. So yes, it's still higher than we want it to be because we can't absorb that much inventory, but it is stabilizing and slowing, which is fantastic because we were in double-digit growths earlier this year and the market was just collapsing. We couldn't get enough buyers in the marketplace and the sellers couldn't sell their homes. The prices were wrong. Interest rates are too high. So all that's changed now, which is fantastic. And the potential future news of reporting from the banks and interest rates is really going to start pushing this marketplace. So home pricing, which is incredibly important. Here's a snapshot. So the average price has been declined year over year. So it's down 4.7%. So yes, some sales have increased, but the prices that they're buying them at are lower than they were last year. And the HPI, which is the home price index, which is a clearer picture, more of a realistic picture of pricing, because it segments out parts of the marketplace and averages out homes versus condos versus one bedrooms, et cetera, townhomes. And what that is a 5.5% drop. So it's a realistic picture. But the good news is that the price dropping has slowed and basically stalled. So from August to September, it's been flat. So no, there's been no further price drops, which is why I think we're turning that corner in the bottom of the marketplace. So hint, hint, if you're a buyer and you haven't got in yet, this is your time. You do not want to wait any longer because once these interest rate price drops continue and purchasers understand that, yes, this is the bottom of the market, they will flood back into the marketplace very, very fast. And banks are really loosening their lending criteria just to sort of prop up the marketplace. So you are going to see a continual rush back into the marketplace. So I don't want you to be left out in the cold. Now, the average days on market is a trend that we really want to look at every single month. Now, if you go back 2 years and you look back previous market reports, we always talk about average days on market. 2 years ago, you'd be lucky to get something at 3 or 4 days on the market if you even had an opportunity to buy anything at all. So the average about 5-6 days typically, most months. 2 years ago. Now we're at 25 to 30 days, which has come way down. Earlier this year, that 60 days on the market was the average. So 2 months on the market. Now, these numbers seem high for Toronto, but if you go outside Toronto, 60 days is actually a normalized time on the market for any house in any market. But we are seeing, Toronto has tremendous amount of people who come to the city every single year looking to purchase. And we generally have low or lack of inventory, but we're not having an issue lack of inventory, nor are we having a lack of people coming to the city. They're still coming in massive numbers, hundreds of thousands of people. And our inventory is there, but no one's purchasing, but it will change. So that average days on market will continue to shrink. It has shrunk all year. And as you continue to get closer and closer to interest rate reductions, as you get closer and closer to people getting more confidence in the marketplace, they will come back in. That will drop considerably. The thing I keep telling all my sellers is overpriced properties linger on the market. If you unfortunately don't have an offer in the first 14 days on the market, realistically, you're either overpriced or you need to change something dramatically. We're always telling people it's not the market, because in any market condition, whether it's good, bad, or ugly, sales are still happening. As you can see, almost 6,000 sales. It's still a lot of sales. But what is moving are things that are priced properly. So if your house is lingering, it's most likely priced wrong. Or if it's lingering on the market, it could be the marketing too. So if you're looking for more advice on marketing, how to sell your property, and if you're not already under contract with a realtor, make sure you reach out to us. We're more than happy to help you out. Now, mortgage impacts. This is the big sort of like talking point all year, even last year. Interest rates have been incredibly expensive in Toronto and really across the country for about 2 years. So that combined with an unaffordable number, it doesn't make for a great choice for most purchasers. So yes, prices are coming down, but the interest rates are so high that it still was unaffordable. So most people just weren't buying, which is you're seeing the sales have been very lacking. But as you continually see these come down and down and down, there's a September rate cut, which is one of them. But there's going to be future rate cuts, most likely 2 more at a quarter point before the end of the year, which is fantastic. So if you look back to last year and the year before at 6%, 6.5%, even if no matter what the price was, people just still couldn't afford the homes in Toronto. So all of that's changing. Prices are coming down, interest rates coming down. The buyers are still coming to the city. Inventory is slowing. So all of this makes for another boom of the market, which you're going to see realistically in the next sort of 6 months. So I really want you to be prepared for that. Buyer demand trends. First-time buyers are actually pushing this marketplace. Most first-time buyers are younger. They have a younger demographic. They are not necessarily economic sensitive, or market price sensitive, because they just need to get into a property. They need to get out of their parents' house. They're getting married. They're getting divorced. They're having babies. They're having multiple babies. They're getting pets. They need backyards. They need out of their condos. There's so many things that affect buying decisions outside of economic factors. Although economic factors are very high right now, most of the time and most of the decisions and most of the properties that are being bought and sold have nothing to do with economics. So just keep that in mind. But they're still price sensitive. Buyers still remain very finicky and very fickle right now. So yes, they have the ability to do that in a buyer's market, but they are also dragging their feet too much. I'm working with a lot of purchasers right now who have an opportunity to buy a great deal, and they still want to wait for a better deal or price reduction. But we're seeing the price reduction number slow, so which means it's most likely not going to get a better in the short run. So you may have another month where it might come down again slightly, but realistically, those numbers are going to start to spike. So just keep that in mind. Seller motivation. Any seller who's realistic on their pricing, who really perfect properties are selling right now in this marketplace that are perfectly priced and perfectly dressed, perfectly show. There's nothing wrong with the properties. That's really what's selling. So if your property is, slightly needed upgrades, or it's slightly overpriced, or the marketing isn't dialed in, you're not going to sell. That's just the reality of the marketplace. Unfortunately, it's not great news, but that is the news. Let's see. So what does this mean for you? So for purchasers, you got incredible selections right now. Lower rates are expected in purchasing power. It's time to act right now before competition increases next year. And you really want to focus on well-priced quality properties, because you have so much choice in this marketplace. It's amazing that you can get something that should, like we purchased a property for a client that was $500,000 below where it should have been priced, but the sellers just needed out. It had nothing to do with economics. They just needed out of the property. So they got an incredible opportunity to purchase a property. It wasn't the best interest rate they got, but as those rates come down, it will improve for them long term. What you can't change is that $500,000 purchase price. So in 6 months from now, when the rates are better, they're going to just refinance and have an incredible opportunity, and the rates are going to be low and their monthly payments are going to be lower. So that is really what you need to look for purchasers. For sellers, you really need to be realistic on your pricing. It doesn't matter what you want out of the property. It's what buyers are willing to pay for it. So you need to focus on pricing strategies. You need to invest in staging, which we do for our clients anyways, in presentation, which is marketing and strategies, which we do all for you. And we're more than happy to sit down with you and talk about our strategies. So if you want to get in touch with us, if you want to discuss your home, if you want to discuss strategy, just click on the link below or reach out to us anytime at youngrealty.ca. We look forward to helping you out.